Hello friends, welcome back to the channel, and this is going to be the third episode on this concept of domination. The first two episodes are still the introductory aspects of this concept. There is a lot more to explore and learn in this concept which will elevate your trading step by step. Now, why is this video going to be very interesting? It's because after learning the concepts that we'll be discussing in this video, you will be able to take trades in an options chart just individually by analyzing an option chart and gauge how an option chart is giving you a message other than the spot chart. So far, we were only analyzing the spot chart. We used to buy calls or buy puts at supports and resistance of the spot chart. But now, in parallel to the spot chart, we will also be looking into an option chart and we will be gauging what an option chart itself is telling, right? Now, before going into the charts, I want you to make notes of whatever we discussed in the first two videos because those are the foundational concepts. Without them, you won't be able to build on what we are discussing today. Today's video is going to be useful only if you are thorough and well versed with what we've already discussed. So now let's go into the live charts and I'll take you step by step on what we are going to discuss today. All right, before going into the charts, guys, let's now just observe one thing. Why am I using this word domination right from the first video? I'm telling you to mark the red candles, the green candles, find the buyer's zone and selling zone. What is it that we are trying to find out? I am trying to take a look at the markets in a way where there is a fight between two people, the buyers and the sellers. Now I am just following the fight. I am seeing who is dominating till where, who is giving up, then who is taking over, again who's dominating is starting, right? Whoever player is starting its domination, if buyers are starting their domination, I want to identify that spot and get into the market, start making my positions. Why? It is going to give me a very good risk to reward. If I do that, I need to find out the right zone where things are shifting, where the trend is reversing, right? This is mostly a trend reversal setup if you closely observe. In this video, I am going to go a little more deeper into the same concept. Before going into the candles, I'll tell you the analogy on how I derived it, what we will be discussing right here. Say, for example, I asked you to mark all the candles, all the red candles and all the green candles. Say, for example, you wanted to buy in the market today. What you will do? You will mark all the red candles, right? Now, there are two things in the market. One, a continuation candle, a candle which was formed to continue a trend. Two, a candle that broke a swing. That candle is a candle that started the trend. For me, that is a much stronger candle than a candle which is continuing a trend. Right now, I am filtering out our process. We are reducing our effort on marking all the candles and we are filtering out on marking only the important and strong candles, because compared to marking domination on all candles, marking the domination and identifying for the candles that break a swing or create a swing, that will give you a higher probability of trend reversal. Once we go into the chart, you will understand what I'm talking about. So let's go to the charts and now start our discussion on this concept. I have the SBI chart of 16th May 2024 over here, right? Now, we are not going into the concepts of domination and all of its step. We are starting something new in this video. I want you to observe one thing and do this one exercise whenever you see this chart, right? Just start classifying candles. What candle is it? Trend continuation or a swing break, right? Or see, whenever it is trend continuation, it is of very less use. If it's a swing break candle, I'm very much interested there, right? Now, I have the 16th May chart over here of SBI. Now, starting from the first candle, I want to explain to you one thing. What is a swing? First of all, a swing is where 3 to 4 candles are involved and then they are trying to break a high if to create a swing low, or they're breaking a low to create a swing high. That is a swing for me. Over here at 10 a.m. we see a small swing getting created. I have 3 candles here and they are breaking each other's high. Now what is happening here is all these candles from 9:15 till 10 a.m. are of not much relevance for me. I'm not interested in immediately getting into a trade and planning my positions on what to do. I am relaxed on SBI. If I'm seeing this day, I'm not worried on what to do. I'm not selling it. I'm not buying it. I'm waiting for the market to create and show me something evident. Now, what market is doing is at 10:15 a.m., it tried to break the swing. I'll mark a horizontal line and see the 10:15 a.m.'s candle closed below that swing. Now, this candle is very important for me in this trading session. Why? This candle has broken the swing. In the concept of domination, whom should you dominate? If you dominate a very weak person, till where do you think you can reach? You have not really won the race. You've not really exchanged hands from the sellers. If you dominate the person who really created some impact, right, on seller's side, the 10:15 candle created an impact and it broke a swing low. If the buyers are able to dominate in this trading session, this 10:15 a.m.'s candle, I'm very much interested. This is a potential trend reversal for me because this is a swing break candle, right? This is where things start getting interesting. If you see, the 10:20 candle is much bigger than the 10:15 candle, but I am still stuck to the 10:15 candle. Why? The 10:15 candle has done something very impactful. It broke a swing. For me, 10:15's candle, irrespective of the size, is more important than the 10:20's candle. I'll continue marking these lines lower and lower and continue to find out how many more swing breaks candle we get in this chart, right? Now, what is the next candle? The 10:20, it's a trend continuation. What about this area where there's consolidation? It's not breaking any highs. It is just consolidating and creating inside candles, right? If any buyer candle comes and dominates this 10:35 candle, not interested. It's not grabbing my interest. I'm not interested. I'm not confident, right? I'll still wait because I don't see that the buyers have dominated an impactful seller candle. They've just dominated a small red candle. It's of no relevance, right? Now let's continue here. This is not a swing break. This is what I'm trying to explain in this example. You need to be able to differentiate which is a swing break candle. You need to have a healthy consolidation and then a break. Good, a swing break candle. But over here, it just spent some time, created 3 to 4 5-minute candles, didn't break a high or anything. Not a swing. It's just trend continuation for me. We will just keep continuing lower. Now here we see a trend reversal. Very good. At 12 p.m., I see that the buyers are coming in very strong. They have broken the highs of too many candles over here. Just the two candles started engulfing almost 7 candles previously. Very interesting point in the market for me on SBI. If I have to take any action at all, right? Why? I'll come back to that. Why? Why? Because it created a swing for me. So long I was stuck in this candle to buy, but I'm no longer. I have found a newer swing. If I find a swing break, I'll be interested in this candle now. What this has done? This has shifted my buying level lower. What does that mean? My risk to reward is increasing. The higher your buying levels are, your risk to reward is not aligned with whatever you're planning. The much lower you try catching it, that's the best place to catch the buyer's swing change. Now here, if you see, I'll clear the charts. Right now, which is the candle that broke the swing of this candle? It is this candle of 120. Now where am I stuck? My interest is no more in this 10:15 candle. Now I'm very much interested in this 120's candle because now this guy has continued the domination of sellers. He's the strong guy we need to watch out for on this day's trading. Now, although as per our previous videos, if you continued marking the red candles, you already find the buying domination over here, right? But most of the times, these things don't continue and give you a higher risk to reward. 1:3, 1:4. They are not such kind of trades. But if you find domination coming above a swing break candle, not a normal candle, a swing break candle, there you need to start to plan to gain more points, not just 1:2. Go for 1:3, 1:4. Trail as much as you can. I'll take you to that part, how to trail, until which point to trail and capture this entire rally of SBI. It is easily doable. After this video, you'll be thinking why I didn't have this concept with me on 16th. I would have captured all these points, right? Now, to continue on our discussion, at 2:30, I have a green candle closing above this domination candle. You can consider the 2:30, 2:40 candle, anything. Both are closing above. Very interesting. Now here is the area where I will start planning my buy trades. Why is it that I have taken a gap of more than a week to come up with this third episode? See, what happens is before going ahead and seeing how we can capture big rallies in the market, we at least need to have a system in hand which ensures taking 1 is to 2 risk to reward. Once your psychological muscle memory has been able to register too many trades of 1 is to 2, I don't mind if it's a loss, if it's a losing trade or a winning trade. But if you have consistently followed this rule of 1 is to 2, wherever you found an entry on the domination concept that we discussed in video number 1 and 2, and if you've been able to take 1 is to 2 in your trades, you are having that psychological edge compared to all others who have not watched the video, who have not taken trades, who have directly come to this video, just thinking that they'll start capturing all these rallies. It's psychologically not possible. It's easier for me to explain because this chart has already happened. It's easier for you to understand and celebrate and appreciate this concept that this is working brilliantly. Why? This has already happened. But what is it that will stand out and help you in achieving these rallies when the market is going on live? It is when you are well equipped and your muscle memory has registered taking 1 is to 2. What is happening here? If you really observe in our previous videos, I was just asking you to keep your targets to 1 is to 2, because that is all it was about. Because we were marking any and every candle, no matter if it's breaking a swing, if it's continuing a trend, we wanted to take a trade and take 1 is to 2 and go out and make profits, right? That was the starting point. Now what I'm trying to get into is identify those areas in the market from where, if there is a potential reversal, you will have a higher probability of catching high risk to reward trades. And this is the key to increase your account. 1 is to 2 is just to equip you for trading, but getting more risk to rewards, 1 is to 3, 4 or 5, is the key to increase your account, is the key to grow your account, right? If you see the SBI chart here, based on the first two videos, if you had taken the domination concept entry, you would have probably taken it at the last red candle somewhere here, right? And you would have gotten out after taking 1 is to 2, 1 is to 2 of this swing. See, it's already over here. You will be out because that is what we discussed, and it was right if you booked your profit there. Now what I'm telling is, you already have too many trades in your account of 1 is to 2 where you can go and vouch saying, I marked the domination, I identified reversal points, and I took 1 is to 2, I followed the rules. Now have the right, I am eligible to go and take this learning and capture more points, more than 1 is to 2. In case of SBI, if you had taken a trade on this candle, very good, you got 1 is to 2. Now what exactly is happening? Did the market reverse after that point? No, it did not. In fact, it just continued the trend on the buying side. See, very few retailers have this mind or this eye to see the market. See, before this buying rally, you would be seeing these big red candles. It will distort your vision. This After this selling rally, you will feel like the big devils are standing, and market going up is very difficult, but it still went up. It is professionals who catch these places and take their buy trades because they know that this is a place which will give them less risk and high rewards, right? All big rallies start from the bottom, not at the breakout point or some support level or something. It starts at the bottom where the sellers start giving up. Now for you to take higher risk to reward trades, if in an intraday session, if you identify a candle that broke a swing and then a candle that overtook it, start to trail your profits till that point wherever you find a reversal setup. And let me tell you one secret. You know what will be the target in this case? The market will try to reach the previous swing break candle. You're following me, right? What is the previous swing break candle that we were standing at? It is this 10:15 candle. If you saw, market started at 2 p.m, almost 2:40 p.m, and the rally continued till the previous swing break candle, because that is the resistance point for market. Once it does something like this, if it is reversing from a normal candle, a trend continuation candle, you know what is the target? It is the latest swing break candle. That is why I asked you to stay with 1:2 with our first and second video. But from this video onwards, if you identified a swing break candle being dominated by anyone, by the sellers, if the swing break candle is a green candle, or by the buyers, right, you need to hold it till the next swing break candle. For that, you need to watch the market and mark those important candles in the intraday session. That is the key. So let's go into more charts and backtest this more in this video itself and equip ourselves, make sure what the concept is all about. Now, for all those who are getting impatient on when is it that we're going to touch the options part, have patience. Let's try and complete this example, which will make sure that the concept is clear in your head, because an options chart is a wild animal to deal with. A stock chart is a peaceful instrument to explain the concept. It's easier for me to explain the theory, right, before we go to the option chart. Now, if you see the SBI chart here, I just have two interesting points in this entire day from 9:15 till 1:40, just two candles. How easy is that? My life is so relaxed. Once I'm filtering out all the candles, the important ones are only two, right? That is the 10:15 candle, very important, it's a swing break candle, and the 1:20 candle, it's another swing break candle. Now we are going back to our first video and the second video and following the same steps of identification, confirmation, and our planning our entry and exit targets. If you notice here, there will be many retailers who would have become interested to buy in these green candles, but me, I wasn't interested, because my concept is saying these green candles have not engulfed any red candle which was a very significant red candle or an impactful red candle. It wasn't a strong red candle, right? Now, until I don't see that in the market, it doesn't matter if it's an engulfing candle, a big body candle, a very big hammer, doesn't change my decision. I'm totally relaxed, and my interest points are still in these two areas, which is 10:15 candle and the 1:20 candle. Why? They broke a swing. There was a fight, buy, sell, buy, sell, buy, sell. And then when the break happened, it is this guy who dominated. I'm interested in him being dominated, right? Not the usual trend continuation candles. Now, based on our first two videos, where will I be entering in this market? In this case, right, if I waited for the swing confirmation, if I waited for the buyers to dominate, I would be entering somewhere here, right? So what would I be getting if I entered here based on a previous discussion? I would just take 1:2 and move out of the market, which is not wrong. We are following our rules that we've learned so far. So I'll be exiting somewhere over here, right? That for this, I'm taking 1:2. I'm clear on my stop loss. I'm clear on my target. Now, once I see the market going above the swing break candle, it grabs my attention. It grabs my interest. Right now, I'm more focused. What am I going to do here? The first thing I'll do is I'll start adding to my quantity. Whatever is my position, I'll add more quantity to it. What is the second thing I'll do? I'll shift my stop loss higher. My stop loss is no longer this swing low. I'll shift it to cost right now. And then I'll trail. Like we discussed previously, the target that these kind of rallies give is to the point where they find a previous swing break candle, which is a previous swing break candle. It is at 10:15. And if you closely observe, I will start planning my exits at this point. I already know that this zone is a resistance zone and the market has traveled without any pullback till this zone. So it is wise to book targets which is more than 1:5, 6, 7. Now it is these kind of targets, once you start booking, is what will result in the growth of your account, right? I hope you're understanding the importance of this. Meanwhile, while you're understanding the importance of catching big rallies, you must not miss out on the fundamental concept. If you're still wondering what is this guy talking, if all of this thing is sounding very random to you, then it's either of the two things. You have not backtested enough our first two concepts that we discussed, or you've not watched the videos at all. We are only building on it, right? Now guys, the interesting part, I'll take you to an options chart and see what an option chart has to tell you while taking the trades. Very interesting. So guys, before going and taking a look at the options chart, I want you to remember all the points that we've discussed from the start, which are new in this video. I'm not touching on the old concepts. One, find out a swing. What is a swing? It is a set of 3 to 4 candles or more trying to break a high in case of selling, or trying to break a low in case of buying. That is a swing. That is the characteristic of a swing for me. That is what I identified in case of SBI, the first example. Second is a swing break candle. You need to be focused on the swing break candle, right? Third is entering on a domination concept. The target is only 1 is to 2, it is fixed. There's no confusion on it. We know our stop loss, we know our targets and the entry point. Now whenever we are entering into a swing breaks candles domination, the concept remains the same, but the target part is changing here. Now here we will start to trail it to the point where we find the previous swing break candle. It can be 1 is to 4, 1 is to 5, I cannot tell you, but one thing I can tell you is it is always more than 1 is to 2. This is what it gives you in return, right? Higher profits whenever you start reaching more than 1 is to 2, 3. You cannot define your system. It can only run on probabilities and depends, where your previous swing break candle is. Guys, I'm going to the Bank Nifty chart. So where has Bank Nifty closed on the 17th of May? It's at 48,204. And where do we find big swings over here? Very interesting day, 16th May 2024. Let us go into this chart and see if you knew this concept. Would you have been able to capture big rallies on this day effortlessly, right? So what is the strike price? Let us choose a strike price of 47,600. I'm selecting the call, right? One important thing that I want to tell you is, see, when I trade options, I know one thing, that this instrument of options and futures of indices has much more volume compared to stocks, right? That is the reason I'm comfortable going into lower time frames. In stocks, I don't recommend people to go and see 1 minute time frame, because the volumes are relatively lower when compared to the indices and the volumes. I am not saying it is not possible to trade. I always try to choose what is safe and what is, having a higher probability for me. It should make me feel comfortable while I'm trading. I don't want to go into a rat race and chase everything that's moving in the market. For that reason, I always prefer trading under 1 minute only in, in an option chart, that too in the money and the current week options. If it's this next week on a monthly expiry, go for 3 minutes or 5 minutes, guys. The volumes are much lower over there. So like we discussed, we are going to the 16th May here. We are not looking at the spot chart at all. I'm not saying you should not. What I'm trying to tell you is how just by looking at an options chart, you'll be able to trade even without looking the spot chart. Okay. Now let's start and identify two things to keep it very simple. Is this candle a normal trending candle, trend continuation candle, or a swing break candle? That's all. No mess, no fuss, right? Here, the first candle is a very big candle, and all these other candles are forming inside it, so I don't consider them as a swing, right? This thing of defining a swing is not a science that I can define you. I cannot objectify it and tell you that this is what it is. It is an art that you need to start building. That art will get built if you start backtesting, right? You need to have multiple examples of what a swing looks like and what it should not look like, right? Once you're clear with that, you'll be clear with this. So here I have, all these are irrelevant candles. Over here, I have a very interesting candle at 1020 in Bank Nifty's call chart of 47,600. When I'm looking at this chart, I'm at no hurry now to buy this call. Why? I'm seeing a red domination candle breaking the swing, and I am totally relaxed until I see a price action above it, the domination concept working above it. Otherwise, this call is of no interest to me, right? Do we see a newer swing below this? Yes, we do. We see a swing break here. Do we see a new swing break here? Yes. Now you might be thinking, why is it I'm not buying at these places? Because these are not giving me confirmation based on domination for this swing break candles. Identification, confirmation, and then only entry, be it a swing break candle or a normal candle. Those three steps you need to follow. Where is it that I am getting these three steps? Which is the last swing break candle of this day? I consider this as a swing because it has broken this high, this red candle of 11.9, guys. Very important candle for me personally, right? Let me move the chart aside. See, I know I'm backtesting this and things have already happened, but you start forward testing it, right? Only then will you know the importance of sitting relaxed and waiting for the market to dominate above a swing break candle. Now, do we see a newer swing break candle below this red candle of 11.8? No. Good. That stops our hunt of finding out the new swing break candle. So this is the candle which is very important for me right now. All right. Right. Did the market go above it? It did. Huh. You might be thinking, how is it that I will be able to catch this target? Right? Guys, if you've not forgotten the SBI example, this is a piece of cake to catch, right? If you followed the domination concept, your entry would have been somewhere here, because there are lower red candles somewhere here. But then after 1 is to 2, what did your option chart do? It closed above a swing break candle, which is very interesting. 11.8. Start adding to your positions. And what is the target that I said? It will go and touch the previous swing break candle. Which one is it? It is this 10.20. Did it go and touch? Very comfortably. Now this is what, this is what is more interesting about this concept. This enables me to capture more than 1 is to 2, 1 is to 3, 1 is to 4 very comfortably, right? I hope you're able to understand the importance of it. See, if it's going above your head, you're not able to catch up, you need to leave your doubts in the comment box so that I need to start pacing up based on your understanding. Otherwise, what I am thinking is I am taking into consideration all your FAQs whenever you're watching this concept. That is the reason I've made video number 1, video number 2, so that I don't want to hurry and jump you off into this concept of capturing 1 is to 5, 1 is to 6. This will be too much for you to grasp at the first instance. First, practice and take 1 is to 2 based on the domination concept. Once you're well equipped, once you have your trading journal pointing at you, 100 trades, 50 trades, you've taken on domination concept, you are eligible, you have the right to go for this. You have the right to go for this right now if you watch the 2 videos, right? If you're with me, continue looking at how much reward has this trade given us if we took a trade on the domination concept. Somewhere here would be our entry. If you don't understand how, you need to watch the first 2 videos. And somewhere here is our targets, which is 1 is to 4 very comfortably, right? Is it achievable? It was achievable very comfortably. I want you to go ahead and backtest this. In this video, we are trying to level up our understanding of this concept. From taking 1 is to 2, how to take bigger profits is the complete intention of this video, right? To understand the concept, to identify what is a swing break candle, how we can identify a domination when there is domination applying above a swing break candle. We understood all of those things from the SBI chart. Now, when I took you to the options chart, what I wanted you to observe here was I never referred to the Bank Nifty spot chart. Why? Because I always test a candlestick chart based on the concepts that we discuss and check if these are working, right? What did I do in this option chart? I was just falling on with the swing break candles till I no longer found a swing break candle. And once the market dominated, closed above it, I knew it is that point where I need to aggressively enter, create my positions and hold it till the next swing break candle. From one swing break candle to the next swing break candle is our journey that we need to try and capture hereafter whenever we see this concept getting created, right? My intention is always to convey all the useful points in a short span of time. That was the intention in this video also, but this happened to go on for long. This video is becoming longer. But guys, if you want to invest into real learning, you need to invest into time. Everything can't be given in 5 minutes and 10 minutes. For all those who have spent time till this part of the video, I am sure a curiosity is put inside your head on how to catch a trade from one swing domination to the previous swing break candle, right? I hope you're understanding. This is what we discussed so far. From one swing to the next swing is always more than 1 is to 2 or 3. This is worth taking your trade with low risk and high rewards. Once you have in your journal, in your trade book, more than 10 to 15 trades taken in this concept, believe me, you will be invincible and you will be able to clarify a lot of doubts to yourself on how this concept is working. To all my viewers who have been following me from video number 1, my intention is to elevate your trading to the next level. That is my intention, and I have a lot of promising content like this coming up for you. But I want you to spend more time on every single video before going on to the next videos that I keep coming into. I don't want to bombard you with too much content and too many concepts. What we have discussed is very good enough compared to a lot of other things that you have already been following. This crafts your edge a lot in the market. You have a finer edge, you know where to take your entries, you know how to take bigger targets. What else do you want? All that is missing is consistently doing it. That's all. Keep in touch with us, guys. I have more content like this. I'll see you in the next video. Until then, take care. Bye.